Hey everyone, Gerard here. If you're an investor, you might be considering or have considered real estate investment trusts. So in this video, I'm going to talk about final tax on REIT. Real Estate Investment Trust, or REIT for short, is a stock corporation primarily created for owning income-generating real assets, which are held for the purpose of generating a regular stream of income such as, but not limited to, rentals, toll fees, ticket sales, parking fees, storage fees, and the likes, as may be defined and identified by the Securities and Exchange Commission, or SEC. Simply put, REITs allow individuals to invest in large-scale income-producing real estate. In the Philippines, REIT is based on Republic Act 9856, which is otherwise known as the Real Estate Investment Trust Act of 2009. Initially, REITs did not take off upon enactment of the law because of some challenges like value-added tax on the transfer of real properties to the REIT back then. But because of the train law, the transfer of property to REIT in exchange for its shares is now exempt from VAT. Now here in the Philippines, some of the notable REITs that are listed in the Philippine Stock Exchange are Ayala Lands A REIT, Double Dragon Properties Corporation's DD Meridian Park REIT, Pag-invest REIT Corporation of Pag-invest Land Incorporated, Robinson's Land Commercial REIT, and M-REIT by Megaworld. According to the law, 90% of the REIT earnings should be distributed to shareholders as dividends, thus are subject to 10% final tax on dividend income. Take note, when we say final tax, as an investor, you will be receiving the dividend income net of the final taxes, and the withholding agent will be the one to remit such taxes to the BIR. That is why for some investors, this passive income is quite appealing as compared to putting up a commercial building or property where related taxes will be filed later on. Let's try to illustrate final taxes on dividend income with this illustration. On October 1, 2021, BPI Trade credited to a client account cash dividends of PhilREIT with the following details. Cash dividends of 0.112 pesos, ex-date September 10, 2021. Number of shares is 23,000. Net amount credited is 2,318.40. How much is the final tax on the cash dividend? To compute the final tax, we can simply multiply the total number of shares qualified for dividends, in this case, 23,000 shares, with a dividend per share of 0.112 peso. Total cash dividends will be 2,576. Take note, ex-date or ex-dividend date means the cutoff period in which an investor can purchase a stock to receive the upcoming dividend payment. So comparing the total cash dividend with the net amount credited, the difference will be the final tax. We can check the final tax rate on dividend income by dividing 257.60 with the total cash dividend of 2,576, which will give us the final tax rate of 10%. This amount shall be withheld by the withholding agent and will be the one to remit the final tax to the BIR. And that's it. So just to clarify, this is not investment advice, but if you're interested to invest in REITs, I strongly suggest you do your research first. To be honest, I personally invested in REITs and I think it's a good source of cash flow, but don't take my word for it. As the saying goes, it's your money, so it's your responsibility, and make the necessary due diligence. If you found value in watching this video, you can watch my discussion on final taxes or check out my video on how Axie Infinity or trading in cryptocurrency are currently taxed. As always, a huge thanks for watching, subscribe for more, and I'll talk to you in the next one.